Understanding Overseas Pakistani Tax. A comprehensive guide for expats. With millions of Pakistanis living abroad, the subject of overseas Pakistani tax has gained significant importance. Whether for career opportunities, education, or personal reasons, many Pakistanis have settled overseas, but with this move comes a responsibility to manage their financial obligations back home. In recent years, changes to Pakistan's tax laws have brought overseas Pakistanis into sharper focus. If you're an expatriate sending remittances back to Pakistan, owning assets in the country, or earning foreign income, understanding how the overseas Pakistani tax system works is essential to staying compliant and avoiding legal complications. Why overseas Pakistanis should understand tax obligations. Historically, many overseas Pakistanis have assumed that because they live abroad, they were exempt from filing tax returns in Pakistan. While this may have been true in certain cases, recent updates to tax laws have made it clear that expatriates have distinct obligations. The introduction of the Overseas Pakistani Tax Framework ensures that expatriates are transparent about their global income and assets. For expatriates, the Overseas Pakistani Tax Framework primarily focuses on two areas. Income from overseas. If you are a Pakistani citizen living abroad and earning income overseas, you may still need to file a tax return in Pakistan, depending on whether you are classified as a resident or non-resident for tax purposes. This classification has a direct impact on how the overseas Pakistani tax laws apply to your income. Assets held in Pakistan. Many overseas Pakistanis maintain significant investments in Pakistan, whether in real estate, businesses, or savings accounts. Under the new tax laws, certain forms of income from these assets may be subject to taxation, even if you reside outside Pakistan. Understanding how your financial interests in Pakistan interact with overseas Pakistani tax policies can help you avoid unnecessary tax burdens. Recent changes to the overseas Pakistani tax laws. In recent years, the government of Pakistan has introduced several changes aimed at improving tax collection and reducing tax evasion. Here are some of the key changes that affect overseas Pakistanis. 1. Mandatory filing of income tax returns. One of the most significant changes is the requirement for overseas Pakistanis to file tax returns if their foreign income exceeds a certain threshold. Even if you are primarily earning income abroad, the overseas Pakistani tax system mandates that you report your income to Pakistani authorities if it falls within taxable brackets. The government has also made filing easier by introducing online systems for expatriates to submit their tax returns. However, failing to file despite earning above the threshold can lead to heavy fines and penalties. 2. Foreign income and asset declaration. A major focus of the new overseas Pakistani tax laws is transparency around foreign assets. Overseas Pakistanis are now required to declare any foreign income and assets, including properties, offshore bank accounts, or investments. This is part of a broader international initiative for transparency in financial reporting and combating tax evasion. If you do not declare your foreign assets under the overseas Pakistani tax system, you risk facing penalties, fines, or worse, legal action. It's important to understand which assets fall under the purview of Pakistan's tax authorities and how to file accurate returns. 3. Tax implications on remittances. Remittances sent to Pakistan are generally exempt from income tax, which is a relief for millions of overseas Pakistanis supporting their families back home. However, if the amounts being remitted exceed a certain limit, the tax authorities may scrutinize them, especially if the source of funds is unclear. It is critical to understand the rules governing remittances under the overseas Pakistani tax laws, as this will ensure you stay compliant and avoid unnecessary scrutiny. Navigating dual residency and double taxation agreements. One of the challenges faced by many overseas Pakistanis is navigating the complex rules around dual residency and double taxation. As an expat, you may find yourself in a situation where both your host country and Pakistan expect you to pay taxes on the same income. Fortunately, Pakistan has entered into double taxation agreements, DTAs, with many countries to avoid this issue. Under these agreements, you may be able to offset taxes paid in one country against the tax liability in the other. However, the specifics of these agreements vary depending on the country, and it's crucial to consult a tax expert to determine how these agreements apply to your situation under the overseas Pakistani tax laws. Common challenges faced by overseas Pakistanis regarding taxation. Lack of awareness. Many expats are unaware of the new overseas Pakistani tax regulations, leading to non-compliance. Failing to stay informed about your obligations can result in financial penalties and legal complications. Complexity in filing. Navigating the tax system in Pakistan can be complicated, particularly for expatriates who may be filing from a distance. Understanding the overseas Pakistani tax guidelines and using the online filing system can alleviate some of the challenges. Currency fluctuations. Currency exchange rates can significantly impact the amount of income that is taxable under overseas Pakistani tax laws. Fluctuations in currency rates between your host country and Pakistan may alter your tax liability, so it's essential to stay informed about how exchange rates affect your earnings. How to stay compliant with overseas Pakistani tax regulations. To ensure you remain compliant with overseas Pakistani tax laws, follow these steps. Stay informed about the latest tax laws. Pakistan's tax regulations change frequently. It is vital for overseas Pakistanis to regularly check updates on tax policies and regulations, particularly those related to foreign income and assets. Hire a professional tax consultant. Because the overseas Pakistani tax system can be complex, particularly for expatriates, it's advisable to seek help from a tax professional. A consultant can guide you through the process and help you avoid common mistakes, ensuring that you file accurate returns. If you want to read this article, visit my website.